Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. Before I get to it, please follow us. Subscribe to us on YouTube. We'd love for you to follow us. We'd love for you to help us build our following. Click that button that's right there if you're watching on YouTube. And you know what? If you're watching from our website, you'll have a button there below the video as well. So let's get to it here. We did just a minor reduction in our outright bullish bias in the S&P Nasdaq here this morning, just because it's starting to feel a little bit of exhaustion. The fact that we got up there yesterday in the S&P, did not set a new record high. We did close that one, but it was a very soft close. And then just the overnight gyrations have started to feel a little bit heavy, and we're heading into that week 3 options expiration, which has created additional volatility, whether it come before week 3 expiration, like today, tomorrow, or the following week after. So we take a little bit of a tone of caution into that. But overall, I mean, things are holding pretty well. A little bit of a pullback in the S&P, battling very nicely at 46.84, 46.85. First key support did stick its neck below, but it did battle back, and it's just right there. So today's close is going to matter. If we close below 84.85, it's likely we could see a little bit of selling overnight, at least ping 67, 46.67. That was a low earlier in the week. So keep an eye on that, how we close. But, you know, the Nasdaq is really keeping things together. Apple and Tesla are really the ones keeping things together. And without them in the green, up to 2 and 4%, then I think you'd see the indices down a fairly decent amount here on the session. But Apple and Tesla keeping things together. Now we'll look for the Nasdaq, that 16,350 area. Could we close above there? And then down in the support, Nasdaq is pinging against, but that 16,230, 240 has been good support. Didn't quite get there, but buyers have stepped in front of that, and Apple and Tesla, helped it from actually getting there. Now also the Russell 2000 down about 1%. Watch that at 23.78 low. Last week is going to be a bit of a point of balance here going into the session. We close at that level or below that level, likely to see some additional selling overnight. So keep an eye on all that. And you know what's dragging on the Russell and dragging on the S&P, but not dragging on tech so much, obviously, is the energies. And now you're seeing crude sharply lower despite what should be a fairly bullish inventory report. You have a composite draw of, I think it was 3.5 million barrels. We highlighted the composite draws of API as well as the composite expectations in the Morning Express today. So take a look at it there. But this should have been a pretty bullish report. You're also getting a good demand from refiners. Refinery utilization jumped pretty nicely, and you had production fall 100,000 barrels per day, estimated production. So all this should have been a very bullish report, but it isn't, because the White House is more likely to release SPR or more SPR with the drawdown. So they're trying to contain prices, and you know what? Let them contain prices. Let's see them do that SPR. Let's see this market fall into 76 and give us a tremendous buy, because it will be buy the news, sell the news event, but you're buying the market. So don't get confused there. So let's look for 76.5 will be a tremendous buy. Now when the front month gets there, I'd like to look a little farther out, maybe look at March to June as a level to as contracts to buy. So keep that in mind. Our trade desk is here to help you, walk you through that. And then for the metals, now, gold and silver bounced back pretty quickly. I was talking about it here yesterday. When we start running, that's when you don't necessarily want to be chasing it. But guess what? We fell off yesterday, and buyers are stepping in. This is a different gold market than what we've seen for the last 6 months. This gold market reminds me of what we had in May through the early part of June. It reminds me of what we had last year into August. This is when you have these dips, and they were just bought overnight, and you come in, this market's higher. So yeah, gold is very resilient here. The U.S. dollar had a nice spike overnight around, I think it was around 9 o'clock, and Central Time. It spiked, the euro fell out, and it looked like it's some sort of, somebody capitulated, somebody got out there. So watch the dollar. The dollar's off in the session. Dollar's more off because of the pound. You got hot inflation numbers in the UK this morning. We highlighted that in the Morning Express. You also have the little bit of weakness in the equities, is bidding the yen higher, so it's all weighing in the dollar index. But don't ignore the fact the dollar index has a lot of momentum behind it, and it's moved sharply higher the last couple sessions, so it's okay to consolidate. But what we do want to pay attention to is gold here battling at 1868 up to about 1875. Do we really close out above there, or do we stay contained into there? And what does the dollar do as it battles right around the 96 mark? So again, very big levels heading into the back half of the week, and silver right around that 25, holding pretty good at $25. But one metal that isn't is copper, getting hit. I think it's about 5-week lows in copper, and that's going with the crude oil. I think that's a lot. Again, talk about the SPR, White House narrative, but you have these COVID cases from Germany to China. You also have this fear of slowing growth in China, despite the better industrial production numbers on Sunday night. So there's definitely some fears going out there on the macro, and you know what? I think this is okay, because it's going to give us tremendous buying opportunities over the next month or two. I think we're going to see a lot of tremendous buying opportunities, and commodities will be trending higher through the first quarter. So look for these. Don't panic on them. Use this as patience as a buying opportunity. And our trade desk is here to help walk you through that. So give us a call, 312-278-0500. And remember, futures trading involves substantial risk of loss and is not suitable for all investors.